All right, so another question is, this may not be the video to ask the question, but here it goes. Can a person do what you do and how you do it if they have a federal tax lien? How can you still get financing, rehab, and then refi if you have some cash but a tax lien without paying off the tax lien? So I think this is a really good question. I do. And I think that it is, one thing that is a little bit kind of misleading about our starting place, right? So we bought our first property in 2017. It was a duplex. We paid $35,000 for it. And I did that in all cash. I got my first job right out of college, and I saved 50% of my income from the day that I was hired. So whenever we were starting in 2017, I had like $100,000 because I liquidated all of my retirement accounts on purpose. It was a strategic play on my part, and that's what we started with. If you want to go back to when I got my first job in like late 2011, early 2012, then that is technically when I started investing, right? Because that is when I was setting myself up from a financial perspective for success. So, what we started doing in the real estate investing world in 2017 wouldn't have been possible if I wasn't already in a solid financial position. Now, I think it's important to note that during those times, the most I made was like 44,000 per year. I was in a pretty low income producing job. That's what it is. I was never a high income earner, and I was just very frugal and saved the majority of money that I made, 50% or more. So that is what I would say. I would say in order to really set yourself up for success, you should try to start or get yourself or build yourself to a position where you are as close to zero as possible. So, there are ways that you could invest, and perhaps it may be prudent for you to invest with this tax lien on your shoulder. However, best case scenario is that you would really focus, double down. You could build your real estate investing skills. You could start finding deals. You can start selling deals to other people, charging 5,000, 10,000 if it's a great deal, $15,000 fees or more, I suppose, and then using that money to start paying off that federal tax lien. And while it would be possible to start investing in real estate with that tax lien on your shoulder by using all cash, by not going to traditional lenders for loans, then I would say you're kind of setting yourself up to have an uphill battle. And part of me thinks that from a progression or exponential growth perspective, you would be better off having the banks on your side and being able to pay that off and start just getting financing. Because, even if you used private lending and you had people that are willing to listen to why you have a federal tax lien and why you're still a safe investment, even considering that tax lien, they're going to be at a higher interest rate. And I think from a long-term play, one of the ways to really tap in and leverage debt in a wise perspective comes from traditional banks being willing to lend on, these properties because they're safe. You're going to get yourself a low interest rate, and you're going to get yourself a very long amortization period. So in order to truly be firing on all cylinders, you need to really get this tax lien paid off. Now, I say that, however, I would also say that banks, even if you were starting at zero, you're going to have this 2-year runway where you have to kind of prove yourself as a real estate investor. Have ran some real estate investments successfully for 2 years before the banks are going to start counting your real estate income for you so that you can qualify more so for traditional lending rather than just based off your personal income. So you're going to have about a 2-year period once you get started where you're probably not going to be all that bankable. And traditional banks, even if you were the perfect candidate, would still be leery on giving you some loans based on the rental properties, not just your personal income. Now, if you're also a high income earner, then you likely won't have this issue as much. So I could see how it would be prudent to kind of form a plan where you're going to address this. You're going to start investing in real estate and also start paying down this tax lien over a 2-year period so that you have a rental property or two that you've used from your cash and you've been able to acquire by going out and negotiating seller financing, building the trust of other people, convincing them that you're a safe risk, even with your federal tax lien, and get a couple of rentals under your belt so that, when you reach that 2-year mark, you've got some real estate rental investing history. And then you also have you've paid off that tax lien. So that's not counting against you as well. So if you can work both of those at the same time, then when you hit that 2-year mark, you're going to be able to start getting refinancing into some traditional loans, pulling out that initial capital that you've invested, replacing any private lending that you have with that low interest rate, long period amortization type funds. But I would say, for the most part, it always pays off to be as above board as you possibly can and dealing with things the right way. And, especially when it comes to traditional lenders, they have a, long period of, actuarial data, statistics behind them that lead them to make the decisions that they do. That's why, this credit rating system has, any weight behind it, is because it, from a statistic standpoint, from a kind of cold, not necessarily caring about the underlying individual that holds that score, but it's a good indicator as how good of an investment someone may be based on their past history. Having that as clean as you possibly can is one of the most important things that you can do to fully leverage and utilize that long-term, low interest rate, long amortization period type financing to best build your wealth. So, everybody makes mistakes. I've really, really hurt my credit scores in the past, and it's something that you should know exactly what goes into it. Anything that could be a negative thing against you from a financial perspective, you should go above and beyond and work diligently to clear that up as fast as possible, not leave it lingering, so that you could have as few obstacles as necessary in order to really set yourself up for your real estate investing career. Because you're going to be presented with tons of obstacles just as you're naturally investing in real estate. You don't need to unnecessarily add some to yourself.
Thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.